Hey, welcome to Stocks, Tech, and Beer, where we grab a cold one and talk about navigating these markets. And one thing that I've noticed lately is that some big companies are doing stock splits, and we got Apple splitting, Tesla splitting, and these stocks ran up into these splits. What does it mean? How do you trade this? And that's what I'm going to get to today. But first, I just want to say, disclaimer: not financial advice. Got to do your own homework. I'm not going to be responsible for any losses that may come from what you do after watching this little YouTube video. And second, I just want to give you a little update where I'm at these days. You can tell the background's a little different here. It's not the nice, luxurious, extravagant fireplace I was sitting in front of for the past few videos. It's because I've left the lake house in Wisconsin and I've driven west to the frontiers of Montana. And I'm staying above some guy's garage right now in downtown Billings. It's just not the quietest place in the world, and the sound insulation here is mediocre at best. But if you're anything, that's why. But I'm excited to check out the frontier, to drink some beers. Today, I've got something from Triptych Brewing Company. It's one I've had before, that Illinois brewery I stopped at on the way up to Wisconsin a couple months ago. This is the Red X. It's a West Coast inspired Imperial Pale Ale. And it's got a nice little head to it, and it's a little bit opaque, which I like. Yeah, but as you can tell, it's a little darker than my normal fare, and it definitely tastes like it. It's a little bit. This is West Coast, or it's not even West Coast. This came from the Midwest. Midwest IPAs just have this little pine needle flavor to it. I don't really like it. This is one of them. It might be a good beer. It finishes crisp, but I'm gonna just give it average 5 out of 10. Let's get on to the good stuff. So, Apple, should I invest? This is a question I've been hearing a little bit over the past week or two going into the stock split. And people are like, the stock splitting, we should buy it, right? And it's going to be a better value. No. Let me explain what a stock split is. I think it's the best way to explain a stock split is you have a slice of pizza. It's a good slice of pizza. It's going to feed you. It's a big New York slice. One slice is going to feed you. But it might be a little unwieldy. It's a little floppy. Maybe they didn't cook all the way through. Crust is kind of sagging a little bit in the middle. So you cut it into two. Still have the same amount of pizza, but it's a little easier to handle right now. Same thing with stocks. It does a split, and you don't get any more of the company. You don't get any more pizza. You don't get any more ownership percentage. What you get are two shares that are worth half of what you had before. And that's all it is.
If anyone tells you stock splits are great, wrong.
It just might make it a little easier to handle. Like, instead of having a $1,000 stock, now Apple is whatever it is, $112, I believe it was after today. It went from 400 to 112, and it's easier to buy more shares at that point. And I mean, you get some people like Davey Day Trader. He's coming out there like, 2 shares is better than 1. Tesla should split every day. Tesla should have infinity splits, and it would be great for everyone. No, it wouldn't. Like, you go too far on anything good. Like, a little bit of ice cream is good. A little bit of pizza is good. You have too much of it, you're sick, and you're out of it. It's the same thing with stock splits. If you have too much of it, all of a sudden the stock's got this low nominal value, and it gets to be a little bit cumbersome to pick up shares. And, for some reason, people love $5 share prices. I don't know why. Maybe they feel like a baller typing in a buy order for 1,000 shares. I don't know. But a $5,000 position is a $5,000 position whether you have 1,000 shares or 5 shares. Like, it's the same thing. Like, what matters is the percentage change. But anyways, that's just a pet peeve of mine. We can go on. Stock split just means you're just going to have to buy more shares of the same ownership percentage. People are like, hey Nick, is $110 a good price to invest in Apple? And I don't really know how to answer that question because, as I've talked about in my video between investing and trading, like, I don't know what people mean by investing. And as an investment, no, but as a trade, yeah, it might be 110 might be an interesting entry point after this market pullback. And let me show you what I mean. I'm going to try something a little different here, do a little dual cast if possible. So I just wanted to start off by showing you a chart of the Nasdaq 100 ETF here. The Nasdaq is mostly tech stocks, and you use this when looking at tech stock. I was talking about Apple and Tesla today. The Nasdaq's a pretty good representation of these companies. So I just want to show you the Nasdaq and where we're at. So you'll see this chart here. I hope it's not too hard to read. I like to use these candlestick charts when looking at trading because the candles tell you a little bit. You can see here this little trend line that's highlighted. It started at the bottom and worked its way up. And Friday I felt pretty good with this close here. The candle closed here right above this trend line. I was like, all right, we're looking pretty good. But then today market was down again, just getting crushed. And I'm not too excited about seeing the price the whole day be below that trend line. But anyways, it's bouncing nice on this other curvy red line here. I wish they were different colors. Might fix that for next time. Anyways, this is the 50-day moving average, and I like to see the stock close above it. And that makes it an interesting entry point because a lot of times the 50-day is the end. It provides support. So the price comes down, hits the 50-day, and bounces off. Kind of like it did Friday. The candle tells you it went down here close to the 50-day moving average and bounced up. And I'm really hoping to see that tomorrow. The futures are up a little bit right now as I talk to you on Tuesday evening, but who knows? A lot could change. Let's look at a chart of Apple real quick. And yeah, so I drew in this trend line here. And you'll see the trend line and the 50-day moving average are both pretty close right here at 107.35. And if you want to put in a trade in Apple right now, I think it's an alright time because you can buy it for about 113. You have a $6 stop loss on it because if it closes below this line right here at 107, you're going to just exit the trade, and that's that. But it's got the chance to go up, I'd say easily back to 130, or just keep holding it until it breaks through that trend line. And that's a good trade on Apple. It's a very low risk reward trade. So you're risking 6% to make 12, 20%, somewhere in there. And who knows, the market really keeps rushing up like it might, because if the whole market bounces, Apple's going to go up with it. So that's really what I would do with Apple. If we're talking about Apple as an investment, that's a completely different story. It's not an investment yet, because even after this pullback, its price to cash flow is still around 27. And when you're valuing a stock, really what you're looking at is you're taking all the future cash flows from here on to infinity of the stock, and you're taking the present value of those cash flows. Or if you don't want to try to figure that out because it sounds like a bunch of hooey, you go on a multiple of the free cash flows. And a reasonable multiple for cash flows is about how quickly you're growing these cash flows. So Apple is growing their cash flow about 10 to 15% a year. So really 15 would be a generous multiple but with the cash flow multiple right now being 28 times cash flows, it's got a long ways to go to get there. I think 28 to 20, which is historically expensive for Apple, that gets us around 85 or so, 80, 85. But to get down to 15, you got to go around $65, $70. And to me, if you're investing at a multiple higher than that, you're cutting into your return. So you want to invest at a low of a valuation as possible, or as a reasonable valuation as possible, and that's 15 times cash flows on Apple. Just because where it's at, it's the largest company in the world. It's going to have to go to the multiple of the market pretty soon. I mean, it can't keep growing like this. Pretty soon it'll take over the entire economy with its market cap. It's not possible, even with funny money 0% interest rates that we see now. So Apple's got a long ways to go to be an investment yet. It's another like 35, 40% lower. And that'd be painful to sit through. I have citrus, like citrusy pine needles. It's just this bizarre mix. I don't get why people like that. Anyways, so Tesla is even a little crazier. I mean, it's a similar thing, but its valuation's gotten so out of control. It's hard to believe. It went from split adjusted. Now it went from like $100 in March at the bottom to over $500 just a week ago, and that's just a radical transaction there. So, I mean, it's the same thing. The fundamentals aren't keeping up with the price. So, as an investment, Tesla's got a ways to go. I'll get there in a minute. But if you want to trade Tesla, let me show you how to do that. Let's go back to the screen. I really hope this works. So, you can see Tesla here. It peaked out at 503 just a week ago, and today it just got punished down to 330. And it was sort of because of the market was the reason why it got pushed down, but also people were bidding up Tesla. Besides the stock split, they were bidding it up in hopes that it would be included in the S&P 500, and they just found out Friday that it would not be, and that was a reason to sell. So a lot of people holding on for the case of Tesla being included in the S&P 500, which the benefit of that is it's the biggest index that people track, like with ETFs and mutual funds. So there'd be trillions of dollars invested in the S&P 500, and a big percentage of that moves over to Tesla because it's a large company. So I mean, it would have had billions of cash of inflows, which would have pushed the stock price higher, because really the float of Tesla's not that big. It's really closely owned by Elon Musk, holds a lot of shares, and Bailey Gifford is a fund that invested in a long time ago, and they're not selling their large stake. There's a lot of people that are going to ride or die with Tesla. So you just got to hang on for the ride. But anyways, moving on to the tradable level, I've got this trend line here that you can follow, and that's at about 300, and the red line, the 50-day moving average, which has been kind of a little, it gets a little close. It bounces lately. It got close here, bounced. And now it's getting close here. It'll be interesting to see what happens tomorrow. It's down a little bit in after hours, but you can't really see trading right now, so it's hard to say where it's going to open tomorrow. Anyways, there's a lot of night ahead of us too. But it looks like you hold it, maybe have your stop at 300 just in case. You want to just wait for this trend line, because the trend line is, started here, one, say that's 2, 3, 4, 5, 6. It's held support 6, maybe 7 times if you include this, and that makes it a pretty strong trend line. And that's something you could watch going forward. I would use that as my stop, and just, if you want to do this, hang on for as long as it stays above this trend line. So you've got $30 of risk here, which is 10%. And it's kind of right on the edge of where I like to be in trades. But you also, you got a lot of upside. It already went up to 500. It could easily get there again. So that's something to keep in mind. But $30 to maybe make, 150 to get back there. That's a 1 to 5 risk to reward. That's pretty good, and that's why a lot of people are probably going to be buying Tesla pretty soon. But is Tesla an investment? No. It's a $300 billion company right now, and its cash flows in 2021. So for not this year, but for next year, the end of next year, the cash flows are projected to be $2 billion, and a lot could change by then. But that's 150 times multiple for the valuation right now, and there's just no justification. It got way ahead of itself. So it's got to go down. That's even tough to say how far it's got to go, because a company like Tesla should maybe, it's still growing pretty fast. Maybe like a 40x cash flow multiple would be reasonable for a company like this, and it would make it a solid investment. Even that might be pushing it. But to get down to a 40x, it's got to fall 70% from here, and that takes us down to, let's say $90, $100, or it was about in March. And that's a big fall. That's going to cause a lot of pain for a lot of people if that happens, and I don't want to see that pain being inflicted upon you. So as an investment, multiple years, no, Tesla's terrible. But as a trade, this pullback, it's giving you an opportunity to roll the dice a little bit. Yeah, so that's how I would trade Apple and Tesla. Just watch these trend lines of, just the upward trend line, which both of them are bouncing off of, and the 50-day moving average, that kind of curvy line. Those are two support lines I would look to hold, and if they break, you just got to cut loose and wait for a better entry point. Looks like I have a little bit of time here. Nikola has been something I've been asked about lately too, mostly by my dad. He's like, "Yo, Nikola's up 40% today. What's going on?" And what went on is General Motors made an investment into Nikola, and that signifies to the market that maybe General Motors is going to either, one, buy out Nikola eventually, or two, do a lot of business with them to, have an order to buy their trucks and help them out along the way. Give them some infrastructure to make it happen. Today I was up 41%, but if the screen's working, you can see this trend line tell once, twice, 3 times here. But then it jumped up, and now it's well above the 50-day moving average, which doesn't really seem to do a whole lot anyways. Held support here. But anyways, the trend line is more important. Trend line's at about 36 right now. Stock's at 50. There's just not a whole lot of support coming up. I wouldn't trade it. It's too much of a risk for me. And as an investment, there are zero fundamentals in this company. This year, it's projected to have $200,000 of revenue. That's $200,000. Like, they're not selling trucks. That's probably merch. Like, these are T-shirt sales or stuff like that. And there's no way you can value a company off of that. Even next year is going to be minuscule. I read a research report today by Deutsche Bank. Their valuation for Nikola is $50 a share, right where it is right now. But guess what it's based on? It's based on what they think the earnings per share is going to be in 2030, in 10 years. There's no way you could have any kind of reasonable expectation, reasonable guess of what their earnings are going to be in 10 years. It's just impossible. They don't even have a factory yet. They haven't sent out one truck. They haven't welded together anything. I don't even know if they have a business plan. There's so much operational risk in this company, let alone technological innovation, disruption that could just blow this whole thing out of the water. Like, there's zero fundamentals on this. You can't justify having any kind of fundamental target based off of earnings 10 years in the future. It's just not possible. It's not even rational. It shouldn't be allowed. I mean, the guy who wrote the report is the CFA. It's embarrassing to me as a CFA charter holder that this guy has this kind of report coming out. I mean, he should just be like, hey, this is my guess of what it should be worth based on some catalysts we might be seeing coming up. He's like, I think investors might hold it at $50 a share. That's all I can say. Like, investors might think it's worth $50 a share for the next couple of years. There's no chance. Like, this stock's going to have a major pullback. I think we'll still see single digits in Nikola at some point, probably in the not too distant future. It's just way overvalued, way overhyped, and they're going to run into hiccups along the way, and it's going to look like the world is coming to an end at some point. And Nikola holders are going to want to drink some beer at that point. And that's all I got for today. I hope you liked the video. If you did, please hit the like button below, subscribe. It helps me out, helps the channel out, helps spread the message. And I hope you all have a good day. Cheers.